Hello, and welcome to the Investing from the 920 podcast starring Josh Hansen. Today we are going to be covering a little bit of a life update, how lumber prices are going through the roof and contributing to the high prices of building a new home. Home improvement stocks are booming, and the stock I hopped on to ride the wave. As well as a shout out to Gabe Graves for correctly answering a question on my Instagram page, where you can find me at Investing from the 920. Alright, to start on my life update, for the time being, Investing from the 920 will only be audio. This is due to me moving back to college, where I do not have a space to record my episodes. More about me is I'm now in my second semester of my sophomore year at St. Mary's University in Minnesota. I'm entering my third month as an investment analyst intern for a new hedge fund in New York called Ironhole Capital. At Ironhole Capital, we specialize in value investing, which is what and how Warren Buffett invests his money. What sets us apart from others is that we also invest in companies from India, as their economy is an emerging market, meaning that the economy was a developing country, but it now has achieved substantial industrialization, modernization, and some remarkable economic growth. With India being an emerging market, that leads to lots of growth, thus being a very lucrative investment. Moving on to some of the top news, the price of lumber has been skyrocketing because of two main reasons. The home improvement customers are improving their homes and is causing demand to increase sharply and the supply to decrease dramatically, thus leading to the price increase. This has caused the price of lumber to hit an all-time high at a price higher than $500 more than its last all-time high back in 2018. The trade unit for lumber in the commodity market is a board foot. This means that one board foot is equal to a 1-inch board, 12 inches in width, and 1 foot in length. That price varies from website to website, but the NASDAQ website says that as of February 7th, 2021, that price is $915. This has been the highest price of lumber of all time. The price of lumber actually dropped with the rest of the market because construction was halted with the rest of the world, but then prices started to rise back up to all-time highs because of personal home renovations and improvements were being made during the pandemic and still are currently being constructed. Home improvement stocks have also been continuing to boom along with the lumber boom. Back in May, I bought a newer commercial home improvement company called At Home, ticker symbol HOME. I bought into this stock because I realized that the boom was occurring, and due to watching lots of coverage about what people were doing during their time off from work during the pandemic, I was able to get in at a price of $2.74 and held for about 1 to 2 months. I sold half my position to secure profits at $3.50 and then proceeded to sell half of the remaining half that I already sold at $4.09 to lock in more profits. And finally, I sold the rest of my remaining shares at $8 per share. While I definitely wish I had held all my shares, it is very beneficial to lock in your profits when trading. What hurts even more is that the stock is currently at $24.50 per share. But I will not complain about a nearly 200% gain on my stock. And by locking in profits, I mean selling some of my total position of a stock for a profit so that there is no way that I am able to lose money on that stock. From first-time homebuyers to families, all kinds of people have been fleeing densely populated areas for the outskirts of town. This comes from a few main reasons. The first of many is that people have been realizing that they would rather have a larger house that comes along with a bit of a longer commute than a smaller house and a shorter commute to work. This comes from the coronavirus lockdown where people were stuck inside for days and weeks on end, thus not giving them enough room in their house to do the things that they want to do. I'm going to start with the positives for urban area living. This is usually close to work and schools. Most places are within walking distance, lots of social activities to meet people, and there's public transportation. Now here are the positives for suburban living. The crime rates are usually lower, there's less traffic, the living style is more relaxed, and the general houses, lots, and yards are larger. Some negatives for urban living includes generally smaller houses, leaving less space for people to enjoy their house while stuck inside during the lockdowns. Lack of privacy because the houses are close together. Little to no green spaces for your dogs or kids to play in. And some negatives for suburban living include less public transportation, more upkeep with the houses that come along with the larger houses, lots, and yards, and the jobs tend to be more competitive. There has also been a very large demand for cottages and cabins due to the lockdowns. They have caused people to go a little stir crazy in their houses and they just want to get out and travel. But due to travel restrictions, they have not been able to travel. So this has caused instances where the buyers are having to pay asking or even more than the asking price to purchase their cottage or cabin. This will be covered more in the next topic. With the fleas to the suburbs, this has caused a lot of power for the sellers of these homes. I have heard and read numerous stories about how people are having to pay over the asking price because there are so many other buyers trying to buy the same house as them. The demand for houses across the nation is also nearing all-time highs. This then in turn causes sellers to have all the power they want because they have so many bidders trying to get the house. Now our final topic to be covered today, I will be discussing how businesses across the nation are having some employees stay at home indefinitely. Companies like Google, Twitter, and Spotify are telling their employees that they will have the option to stay home and do their work instead of coming to work every day. This is seen as a win for businesses because they will likely need smaller offices, reducing their overhead costs. This is seen as a loss for construction companies, landlords, and real estate agencies. The demand for these spaces is down because of the businesses telling their employees that they do not have to come into work every day, thus leading the business to downsize, needing a smaller office space. That concludes this episode of the Investing from the 920 podcast. Make sure you guys like and subscribe for more videos like this. I'll see you guys next time.